Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name is Doc Severson. I'm joined here today by Dave Lukas. Today is Monday, the 19th of May. And the market is persistent, relentless, does not want to stop. I think a lot of bears have been bent over backwards into the corner. And, what we're trying to see here is whether or not they the bulls are exhausted, or are we going to print new highs before this thing is actually going to
Mm.
take a rest? We don't know. But Dave, what are
Oh,
you
I
seeing out
know.
there?
This market is going to sell off like crazy starting next week because I'm leaving to go out of town. So, whenever I travel, the market acts up, right? So, but no, we're there. I mean, we mentioned it last week. We were coming into exhaustion on the daily charts, and we are clearly exhausted on the daily charts. The Moody's news on Friday gives a good excuse. Now we saw the initial big dip this morning, bought back up, right? Yeah, a little bit of selling coming in now, not that much. We'll see how the day ends if we go back to the lows of the day. But we could either pull back decently here or flag out. I could also see that being a real possibility because the we're in a strong weekly uptrend too. So, but I just it never fails. I always prepare for the worst when I travel because usually it acts up. So if it's gonna happen, it's gonna start, next week.
We've seen the market, we've seen the S&P drive over 1,000 points over the course of the last month. I mean, that is epic. I'd say
Crazy.
after last week, I think there's a good. We were wondering like, okay, is this thing gonna die with a monthly lower high? I think after last week's breakout, that pretty
Yep,
much cemented it that the next low should be a higher low. We should be
exactly.
eventually, at some point this year, printing new highs.
Yeah. Well, that could come, I mean, that could come really in the next few weeks into June. We could flag out for 4 or 5 days here, charge up that daily chart and just resume trend too. I mean, that easily can happen.
Right.
Um, Historically, and actually, if you can pull up a 1 year chart, if you can with the Bollinger Bands, um, you can see where these energies get exhausted like this and what these things tend to do. They don't just drop immediately. Sometimes you'll have train tracks for a few days, then you get the drop and things like that. So we can show that and kind of walk through, and you can see there, like if you look at the exhaustion times, like just going back over the last year, and you can see where, like, for example, November. See that move off the bottom in November, and then it got tired and rolled over like that to put in the higher low, and then kept going, right? Those usually when we get into these exhausted states, those are the type of things that you see. Even right there, yeah, you got exhausted and then you drop. But another good one's that August and September period. Look how it went train tracks for, gosh, several days, like 4 or 5 days before it gave up, to the downside. That's what I'm saying. It's like perfect. Go train tracks for the next few days, and then when I leave, it's gonna sell off, right? But that's the type of, we see that a lot from these exhausted levels like this.
Yeah.
And so that's the kind of the thing that I'm watching here and just I'm really excited. Like I think the best thing for this market would be just a small pullback, like right into that like 57, 5,800 range, right above where we just gapped out of, right? That prior resistance now becomes support, right? And so that is like a perfect place, 5760 right in there. Yep, that area I would take advantage and sell pretty good into that, and take advantage because I think that's where you get your higher low, and then you bounce and you're off to the races to new highs from there. It doesn't have to play out like that though. We can just flag. We can just go nowhere for like a week or so. But seasonally, typically that later May into early June is more volatile. And then you get like mid-June through that early August period, which is rally period. You get that August, later August kind of swoon slash volatility into early September. And then typically that wraps up by October, and the fourth quarter is pretty good. I mean, that's your typical year, right? So,
Yeah, the one thing I'm noticing here is that if you look at the weekly chart, you might anticipate and say, well, look at this, the weekly chart's still got energy left to burn.
Yeah.
But what's going to happen is that all of these candles are going to fall off the back here in the
Hmm.
next couple of weeks, and we're going to be left with, over 1,000 point move, which
Yeah, it's going to get
is
exhausted
which
quickly.
means that just based on what we've moved already, it's going to be like down here, which means that we're
Hmm.
probably looking at the month, like you say, the back half of May into early June, probably being some type of corrective price action.
Yeah.
Now, there's several ways that this could play out. So what I always say is that markets can, when we reach exhaustion like this, markets can do one of three things. It can walk sideways. And that's kind of what we're seeing right now. We're seeing like day two of sideways. It can also pull back. It can go back from where it came. So that's the faster way to build up the energy. It's much, much faster. Or number three is actually if it just continues to grind higher, like just nobody can believe it. Everybody's waiting for the pullback and it just never shows
Hmm.
up. So we've seen that before. We've seen the upside grind, which usually ends with people chasing after it,
And it ends
and
poorly.
and then for every parabolic tail like this, we get what's called a hairy back. When
Hmm.
markets go ballistic like this, they always get a really ugly backside to them. So I still think that even if that occurs, that we will still maintain larger time frame trend. It's just that it's going to get ugly in the short term, and it will
Once we come,
coincide with some negative data point
yep,
that comes along, and everybody goes, "Oh no, can't believe this is happening," and it just
exactly.
serves to set up the just set up the fear, and it just sets up the next higher low.
Once we get that higher low though, I think we're off to the races back to just a quiet and trending,
Oh yeah.
standard typical market, right? So that's the for me that is the really key thing to get at this point. That would be the healthiest thing. It would really set this market up for longer term success.
Yeah, so what Dave is talking about here is if you take a longer term view of the market, we have several different types of characters. So this is like, what we always talk about is the disgust phase of the market. This is what's called trending and volatile. So it's highly, highly volatile. The ATR is off the charts and it's trending to the downside. And we've seen that just since, in the last 5 years, we've seen that several times during this. And of course, we just I think we're done with this period. But
Mhm.
then what happens is out of this period, usually what you do is you see some type of this spawns the next longer term bull rally. This spawns the next longer term bull rally. And so what Dave is suggesting is that we're probably going to go into some form of this quiet and trending. And what makes it good is that it's typically very repetitive. It's sort of a stair stepping type of motion. Now, occasionally you'll see a scary pullback along the way that comes on the board, and then it just sort of continues, right? It goes through the same kind of thing. And then when it gets a little frothy, it goes through another one of these things and it bucks everybody off. And then it just keeps on continuing. And 80% of the time, we will see price action like that. What we've seen over the past couple of months has been actually pretty rare. We don't see those that often, especially ones
Right.
that sharp and that violent. I mean, this is every bit as shocking as the COVID move, and you can see what kind of a reaction that we had from the COVID move. So, that's kind of what we're expecting to see. Is we're expecting what Dave's talking about is setting up the next higher low, and that should kick off the next period of this quiet and trending for that. So we're looking forward to that. And we're also going to get very aggressive on that next higher low. Next time we see fear coming into the market, we're going to be selling into that with gusto. Guys, any
That
questions?
that is the
We're gonna be here
opportunity.
for another few minutes. Any questions? Anything that you guys want us to cover while we're here? Any other charts or anything like that?
Yeah, Doc, while we're looking at this, pull up UNH. So United Healthcare has gone down over 50% in the last month, and it is starting to rally.
Good grief! Wow.
So, in fact, see, pretty insane, right? So you kind of think of this stuff like reversion to the mean, right? This thing is really, really, really oversold. So if you're looking for something to snap back, it started to. In fact, I with our students, I think we nailed it pretty good last week. When it was down near that low, we actually sold into that, and with just a few days, we were out with the profit target we were looking for. So that thing is, it's cranking. It's got a long way to go. So the options on this thing are really rich right now because of the volatility. And so you can really take advantage of this thing. So this is one stock right now, like where you've heard be fearful when others are greedy and greedy when others are fearful. This is one to be greedy on right now because I do think it is, for some of the issues that it has, I think it's overdone at this point. So,
So
um,
I would look at like a 250. A 250's got a 14 and a half delta, which is about one standard deviation away.
yep,
And
yep.
so you're getting let's just say you get 630. So 630, $630 on a contract, and you have to margin $25,000 on that. That's 2.5% over the course
Hmm.
of 60 days. So 2 months, 2.5%. That's not bad, and that represents 250 is basically the low that we've seen. So
Well, look at it.
that's where a huge volume profile node is at. So there's a huge
Yeah.
amount of support right there at that 250.
Well, and if you look at a spread there, if you do like a 250 by 240 spread at that sell a spread there, you're doing, you're getting a heck of a return too on that.
Yeah, I like that trade.
Yeah, so that's one that I've played. I've got a covered call sold on it for this week. I bought some shares and got a covered call, got a nice run up in the shares, covered call sold for this week. Um, Yeah, I mean that's just me personally, but yeah, there's some good opportunity I think in that thing right now. Something to put on your radar.
That's your classic catch the falling knife trade. So
Hmm.
here's the deal with something like this. Even if this is a transition into a new downtrend, you're still going to get it. The rubber band is really stretched back here, and even if this is transitioning to a downtrend, it's likely to snap back up to like 450 before the next round goes over. So this is where
Yep.
you could sell a spread, you could sell cash secured puts, you could do anything like that, and then not take this thing long, and then as it gets up into this area of resistance, which is at 450, that's going to be super tough for this thing to get up and back in there.
You should be able
So
to get out by then easy though.
well, here's my point: is what you can do is something like this: is it snaps back up to 450, you can take profits on the trade that you set up down there, and then maybe sell some kind of call spread that's up here at 550, and so you can you can kind of play this thing in both
You could
directions.
do a modified synthetic on this alone if you wanted to and take advantage of that too.
Yeah. So what Dave's talking about with a modified synthetic is if we go out to UNH, we can say, all right, so we're going to give ourselves some time on this, and what I like is the 250 level. So if we sell this for a 250, so we're going to analyze selling a single put at 250. And so let's say we bring in 635. So what that means is that we now have $635 of of budget
Premium.
to
Yeah.
work with, and then we can turn right around and buy a call option for this, which is going to be at the 400 strike. So we can't lose money on this if it just stays in the middle. And so here's the thing: is like if this thing does really rip from here, and if it does go up to what do we say, 450?
Mm-hmm.
On one single option, you can make that's goodness, that's 7K. That's pretty significant. And so you could fund that. You could fund that trade instead of trying to buy a call option right now, which is like that would be disaster to buy a call option down here because of the volatility
Yeah.
crush.
Yeah.
But if you can get this thing to go up to 450 or so, you could still have you'll still have, at the very least, you're going to have that intrinsic value of that option, which is going to be worth at least $6,000. So, yeah, that's a cool trade. I like that a lot.
Yeah, some good opportunities, and like this is rare though. I mean, it's when you see it, you gotta kind of, and it can feel bad because of the way the stock's beaten up. But this company isn't going anywhere. Its free cash flow is astounding. I'm surprised Buffett hasn't jumped in on this one, honestly, being as much of an insurance company lover as he is with Berkshire. But this is a looking for mispriced value in the marketplace. If you're the old Benjamin Graham intelligent investor thesis, right? This is a good example of that.
Do I still? I think I still have that book on my shelf. I've never read it though.
That's all right. You can tell ChatGPT to summarize it for you, and you don't have to.
Yeah, let's see what's actually moving here today. What is? We're going to look through the sector spiders and see what's moving today.
Yeah, I would not be surprised in the final hour if we just sell back down today. I think, getting people on board to the rally, from this morning and then sell it back and take your profits by end of the day. I can see that happening.
Yeah, energy's down just because of the whole, Ukraine and Russia,
Yeah.
peace possibilities. Isn't that funny? And then here's healthcare. Like you said, healthcare is actually up based on the bounce from UNH more than likely. Because if we go out to actually UNH itself, are they? They are a Dow component, aren't they? Yeah, they're right there.
Oh yeah.
So
The
they're
reason
up
the Dow sold off
7.5%.
in the last couple weeks because of them.
Yeah. So they're actually powering the Dow today on that. But this is a classic panic move and then move back up to 450 and then the next. Usually we don't see V bottoms from something like this. Usually you see a reaction back up and then I think I'll take my profits and then the next leg down comes.
Because these people, anybody that had this thing or had anything on it got caught. Because this thing, you can see how fast it went down. So a lot of people got caught with the way this thing really crashed.
Oh, big time. Think about how many pension funds and
Yeah.
think about how many, mutual funds own UNH, because it's conservative, right?
Right.
So
They're
you have a conservative
right now they're bag
holding.
right now they're bag holders.
Yeah.
Hey, another thing we didn't talk about, I think it's important for everybody, is rates. So we got the Moody's downgrade. Rates are inching up. The 30-year went over 5 today. The 10-year is flirting right on 4.5. And so that's another thing, guys, to keep on the radar is watch the rates. If they continue climbing higher, that may be another excuse for this market in an exhausted state over the next couple of weeks, kind of to give a little bit more.
Yeah, especially tech. If the
Yeah.
tech has been extremely sensitive to rates over the past, since 2022, when rates started going up based on Powell, that's when we started having real problems in the market. So.
So yeah, watch the rates, and then what's Bitcoin doing? I know we hit 105. It looked like over the weekend.
This is really interesting because we're seeing these potential traps. Like this happened a little over a couple weeks ago, as we had this attempted jailbreak to the upside, and then it came back down, and then that builds up the negativity again. So everybody is like, oh no, we're going to crash. And then that negativity gets unwound. We go sideways, tries to break out, comes back down today, and then the same thing happens again, is that people are like, okay, let's squeeze out the bears. So it's just a continual game of this sort of thing. Again, my target is up here at 120. 120 to 122 is my first profit taking area for Bitcoin. And then I'm going to look at things like divergences. I'm going to look at things like Bitcoin dominance. So there's an interesting thing in the market where you've got BTC.D, which is Bitcoin dominance. And if you look at this, like in a monthly chart, you can always see Bitcoin dominance goes through, and then the market, the rally gets old, it gets mature, and what happens is the dominance starts to lose it. And then this is where the altcoins come in. This is where all the Pepe and the fart coin and stuff like that starts to take off, because people are like, hey, I think I'll take my profits in Bitcoin now. Thank you very much. It's kind of expensive and nobody wants to buy it anymore because they view it as expensive. And so you can see that we haven't got there yet. So we should stay with the majors for right now. We should stay with Bitcoin until it begins to break this trend. And then that's where I'm going to start to really harvest profits on Bitcoin. And I may take a small percentage of that and put those into alt assets and see if I can, get a 10x or something like that. But it can be very sketchy. You're walking on the edge of a razor blade at that point, because the market's more than likely very mature, the rally's very mature, and then the slightest thing will set it down. So I think we got a ways to go on this, on Bitcoin. So good trend though. I mean, look at the trend on this is excellent.
That's a perfect quiet and trending example.
This is a monthly chart, man. This is, and you can see it's starting to accelerate. It's starting to follow that sort of parabolic. You're getting more and more institutional assets that realize, holy crap, there's only 1 million Bitcoin left to be printed. Out of the 21 million, we're already at about 20. And so everybody's like, hey, if we were going to run a sovereign fund, we better get on it. And so I think there's a short window of time before we get this crazy compression to the upside.
While we're hitting these two, might as well pull up GLD. So gold, no surprise, is up today on the Moody's downgrade. And the rate's going higher. So, but gold has pulled back some. So we said, what did we say last week? 290, right, on GLD was a good level, and it hit that and boom, bounced back off.
Right off of there. So, so we actually transitioned to a weekly downtrend, which is a monthly pullback. So what's happened is it formed a lower high, lower low. But what you'll notice about this is that this is very gentle. And so just because it's in a weekly downtrend, really what that means is that we've seen this go into the next consolidation level of this. And so eventually what we'll see is that, so this is just a monthly pullback, which is a weekly downtrend. Eventually we'll see the price break out of this once it builds up the energy. So it's the same kind of, we see the same patterns over and over again, just going from range expansion to range contraction. So this is why I trimmed my exposure, but I did keep a good half of it right now. So I'm just anticipating I may enter back in somewhere down in this area.
Yeah, if it gets down low 290s, high 280s, I mean, that's a good spot in this thing.
Yeah, true. Any questions, guys? Anything else from?
Yeah, you guys have been quiet today.
Yeah, we got a quiet crew today.
We've covered all the bases, though. Well, this is a good one. You guys should go back and watch it. We've covered everything from the markets to opportunities to commodities to Bitcoin. So you guys have gotten your time worth out of it.
So just in general, a net on this is that for the past couple of weeks, we're like, okay, is this or isn't this? Is this going to be a lower high? Is this just a bear market rally? And I think what has happened over the past 2 weeks is that it blew through the ceiling of the bear market rally, such that
Yeah.
I think it would be highly likely, or I should say the corollary, it's highly unlikely at this point for the market to put in a lower high and then dump from this point. So something really unusual would have to happen. The market right now is priced in a great deal of uncertainty, has dealt with an amazing amount of uncertainty going forward. And I think the biggest thing that happened is you're seeing GDP tracking positive for second quarter. So whatever has happened with the tariffs so far has not run downstream yet. So,
Yeah.
and that was the big fear, is that, oh no, these tariffs are coming along. We don't know what's going on with them. They change from day to day. And that means that we're screwed in the second quarter of this year because they're going to hit and everything's going to fall
Right.
apart. And so far, we have
Recession,
not seen
yada
that.
yada.
We have not seen that. So I think
Yeah, I mean,
this may turn out to be an event instead of a full transition to a downside bear.
and that makes sense. To go into another bear as close to the one we just came out of would be, I don't know if in history that's happened that close, but maybe.
What,
But it's
3 years?
2 years, yeah, within 2 years or so of ending a bear. But I mean, to go right back into one, and again, we've talked about there's different types of these corrections like that. There are the um, policy driven ones versus like the fundamentally driven ones, right? And we
Well,
aren't
and this
in
is
a
where
fundamental
we
one,
get into semantics, because in effect we really did go through a very, very short compressed bear market, which
Yeah,
does the
that's
same
true.
exact thing, right?
That's
So
true.
instead of going through 18 months of torture and drip, 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 just
Yeah.
like, you know, bamboo torture, you get it over with. You rip the Band-Aid off, and then
Yeah.
it's done with.
Well, and
So
in the rally off the bottom like that, that V bottom, that's again, that is, not symptomatic, but a kind of a hallmark of like a more policy driven one of these things. So
yeah, it's an event which in which the uncertainty clears up. The
yep.
uncertainty clears up, and I just think the market like acclimated itself to the idea of where we're going. I don't
Right.
think it was really clear where we were going, and I still don't think it's totally clear where we're going. But it's more clear than it was, and that's really all the market wants. Is that it's just a general sense of certainty that you know the 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 guy at the switch is has some kind of control beyond this. And there's some other things that are happening too. I mean, the end of the Ukraine war, I think, would be a good
Yep.
thing if that
Positive
means
news on
that
that today.
trade, and that's what we're seeing today. I think that's the reason why the market's been relatively strong today. Is the reason why. So Trump wants them to end the war so they can increase trade for both countries. So
Hmm.
so in either case, we win from that. So just outside the fact that we're not killing young men anymore. So it's so there are some good things that are happening out there, which is leading this
Absolutely.
market to
Now,
just keep on going.
just a programming note. I mentioned traveling over the next week or so. So, Doc, I think you'll be here solo next week. Is that right?
Yeah, probably.
Yeah. So Doc will be here solo,
Yeah.
and
When do you
yeah.
return? When do you return?
Actually, you'll be here solo the next 2 weeks, I
Two
think,
weeks.
because I actually fly back on the following Monday.
Okay.
So
All right. Well, you guys
I'll
are
send
stuck
you
with
my
me.
I'll send you my thoughts. You can share them with everybody.
Okay. Well, thanks everybody. Thanks for joining us here today on the 19th. So we're gonna actually next Monday. I'm gonna take a break. I'm not gonna trade next Monday, and I suggest that you all do the same.
That's
So
right. Next Monday's a holiday.
yeah, I won't see you guys again for 2 weeks, which means June. So we'll be in the month of June the next time that we talk. So okay, guys.
Cool.
All right. Thanks everybody. You
All
guys have
right.
a
Thanks,
great
guys.
Monday.
See ya.